The cover of Barron's is...
I'm not responsible.
I know. I'm not blaming you. Is the bull unstoppable? Now, to be fair, as I said earlier, they do kind of poke fun at themselves with the sort of the inverse coordinator.
Right.
But, I mean, at some point, is this market rally going to peter out?
Well, look, right now, we're ahead of an earnings season where we've had questionable economic data going right into it.
And we are in the middle of a 7-day winning streak and one down week for the NASDAQ 100 this year.
Well, that's why we might, in fact, worry a little bit. Now, the first quarter for the U.S. economy looked fairly close to a 1.5% GDP quarter as far as we can tell. I think it ended stronger. You could see what happened with the jobs report for the month of March, with the ISM data for the month of March, stronger than the quarter as a whole. The worries in the bond market that we have seen from the end of last year into this year were legitimate. We had a Federal Reserve that would have tightened 3 more times, that would have continued quantitative tightening without end, had there not been the warning signs. But the Fed heeded those warning signs. The economy, I think, has the potential to regather some strength. First quarter earnings seasons tend to be strong compared to fourth quarter earnings seasons, but we did have a lull in economic data. I think that's most important here, is that a lot of the fears that we had about interest rates and about trade policy, I think, are probably lower risks than where we were at the peaks of last year. The stock market is still lower.
Why is that? You got the president saying he might shut the border with Mexico, well, $700 billion back and forth in trade.
Yeah, you don't sort of sell cars if the door handles aren't on, right?
Sure.
So, that is a significant risk of business disruption if we were to interrupt trade in that particular way. But we've also taken that particular threat off the table. Another year, again, to see on that particular one. But I think most importantly, where we were with China and where we are with Europe, and more importantly, where we are with the Federal Reserve compared to where we were last year, the forward-looking concern about the Federal Reserve over tightening is a diminished risk. And we have a very good chance right now that earnings this year will mark a new record high. It's not going to be negative 2% in the first quarter.
A new record high.
New record high this year.
Okay, so in December, I think, in a technical term here, the market freaked out, for lack of a better term, about where earnings in the economy may come in. The market has obviously reversed course and realized we may be overly worried about how earnings are going to come in. But are they going to come in enough and good enough to meet some of the stats that we just threw out there?
Well, importantly, I think the first quarter is going to be considerably better than analysts have estimated.
Okay.
This is the case, as we have seen, for all of 10 years. Now, if they do that, we will not need to grow by 10% by the end of the year to make the year's earnings estimates, right? Because you'll get more of it up front. And you can have a slower growth year overall. It's not going to be anything like 2018 in terms of the earnings gains, but we will still eke out some further gains. And I think what's most importantly here, if you think about the fourth quarter and the warnings that we had, this was like driving in a rainstorm, driving too fast and almost veering off the road. But instead, you didn't. And so you drove more cautiously and you got home. That's very much the kind of analogy that we should expect, particularly when the Federal Reserve has changed its policy, reflecting on a 3% growth year, a year of tax cuts, and we can keep going just as we were. They've altered that course in a way that's much less likely to disrupt the U.S. economy. Ideally, we'll do the same in terms of other risks.
It's a weird year because all the S&P up 15%, NASDAQ up 17%. Whenever you throw that out there, somebody, of course, will say, yeah, but we're just coming back from what we lost in December, so they're not real gains in some way. We're just clawing out of that hole.
I think it's fair enough to say that we've done that the bigger gains of the year.
So let's just reset now, right? New quarter,
that's right.
New reset. Can markets make more gains from here on out? Not just get back what we lost, but new gains.
I think new record highs in earnings with a relatively modest sort of undemanding interest rate backdrop can get us new record highs. I don't think it will be as easy as bouncing back from a lull. And I do think that around the world, where you can take a look at much larger, losses need to be recouped, where you have a far less demanding valuation picture, in some of these markets, you'll go up somewhat further just to catch up.